Hello and welcome to Managerial Accounting. This is Chapter 7, Activity-Based Costing, where we'll look at a tool to aid design making. In this chapter, you're going to have 5 learning objectives that are examinable. First, we're going to look at the difference between activity-based costing, so ABC, and how that differs from traditional costing, which you saw in the previous 5 chapters. We're then going to do a process for steps 2, 3, 4, where we're going to be assigning the costs to pools using some allocation strategies and computing the rates per activity and then allocating them to the products so that we can see how much did this product cost and therefore how much are we going to make or what is the customer margin on that product. We are then going to end with looking at the differences between traditional and activity-based costing again, mostly as a summary, but kind of in greater depth than what we'll see in our first learning objective. All right, so what you've probably seen already or what you will see soon is that this chapter contains 2 videos. One is this one, where we're going to cover learning objectives 1, 2, 3, and 4. And then we're going to end with kind of a summary video in the next. So this one, the first video would have been very short because I always had LOs 2, 3, and 4 together. But last minute, I was like, let's do a brief overview of LO1, meaning let's do a brief overview of ABC costing and how it differs from traditional. Then let's actually show you, like right in here with a comprehensive example. And then in the last video, we'll revisit again in a somewhat greater depth than LO1, but kind of with a more refined, this is why it is so flippin' different. And the one thing that I really want to kind of reiterate is, and kind of almost emphasize with these formats of these 2 videos, is the number one difference between ABC costing and traditional costing is traditional costing is gonna feel really quick. Okay, people, so buckle up, maybe pause the video, go get yourself your favorite caffeinated beverages. I don't condone energy drinks, but go get a few. No, I'm just kidding. Or coffee or tea or lots of cold water, do a couple push-ups and get ready to rock and roll because we are gonna look at, man, we turn into our parents, hey? We're gonna look at the differences between ABC costing and traditional and then a comprehensive example. All right, so ABC, again, activity-based costing, is designed for use in internal decision-making and differs from traditional cost accounting in several ways. First, non-manufacturing and manufacturing costs may be assigned to products, but only on a cause and effect basis, meaning we only allocate costs to the product in ABC costing if we can see, the more we make of this thing, the more the costs that we incur. So that differs from traditional costing because we look only at product costs. We wouldn't, for example, include any sales commission for selling an admin under traditional costs, right? Because that would go straight to the income statement. That would go straight to those period costs. But here under ABC, if we're like, hey, salesperson, you make $5 for every product that you sell, you best believe that's activity-based costing and is going to get captured in that product cost. So this is, again, internal. I cannot stress that enough. Internal product costing, because this would not pass generally GAAP costs, so our generally accepted accounting principles, right? Because we're not we're not allocating things between product and period. But we're like, hey, did you go up with the activity as the activity of the product went up? Cool, you get assigned a cost. You get assigned a cost. You get assigned a cost. And if it didn't, then you don't get assigned a cost. So we defy the laws of GAAP here. Alrighty, that means that some manufacturing costs may be excluded from product costs if we can't tie the activity directly. That means that we're going to have lots of overhead cost pools. So when I said that this is going to take more time, ABC, activity-based costing, is a pain in the butt. I'm not lying. And I just mean this not from like a learning point of view, but like when you actually have to do this in real life, you'll see there's a lot of decisions, like individual decisions that need to go into this, and then there's a lot of calculations that need to go into this. So at least in a business, like they'd have to spend a whole heck of a lot of time even setting this up in the system. And sure, once it's set up, then it's troubleshooting, but it still is a great time investment. All right, so lastly, the overhead rates are also known as activity rates, and they may be based on the level of activity at capacity rather than on a budgeted level. So that what we saw at the traditional costing in the previous chapter, where we use budget level, we're going to use a level of capacity. So, what is the total amount of this thing that we could produce? And cool, that's the cost that we will assign to it for activity-based costing. Alrighty, let's take a visual so we can look at the overview. So on top is our traditional absorption costing, is what we refer to it as, and that's what we would have seen in chapters 1 through 5, more specifically, more so when we allocated the predetermined overhead rate, the POH, in our last chapter, chapter 5. All right, we have our manufacturing costs. Those are all of our product costs. Are they direct materials, direct labor? Cool, they go to the product. Are they indirect, but still manufacturing costs? Plant lease, machinery, supervisor costs. So we put them into our OH, our overhead, and then we use our predetermined overhead rate, and we figure out a driver, and we allocate that overhead using the POH to the product costs. Cool. And then over here, if it's anything like head office costs, anything like selling costs, these are both considered period costs and would go straight to the income statement, whereas the product costs would only go to the income statement when the product is sold and transfers from inventory to cost of goods sold. Okay, but here in activity-based costing, again, non-GAAP measure, this is for internal decision-making purposes only, we are looking at, hey, does the cost go up the more of these things that we make? If it does, then it goes to the product. And if it doesn't, it will likely go to another overhead pool and probably not see, and probably go straight to the income statement. But whether it's manufacturing or non-manufacturing, if we can tie it to the product either directly or indirectly, we are going to put it to the product. So most costs, or all costs, if we can tie it to the activity, will go to the product. All right. So how are we going to do that? Well, on a high level, since ABC uses more cost pools and unique measures of activity to better understand the cost of managing and sustaining product diversity, it's important that we really figure out what is an activity. And an activity is an event that causes consumption of an overhead resource. Simply put, what we said before, what I said before, is that if we use, if the activity causes, let's see, I don't want to define it by defining it. If the more we produce, the more costs we incur, then that means that that activity is tied to the product costs going up. So we want to see what is the cause and effect that will have consumption or increased costs, and then we tie it to the product. So technically, and not technically, but just there are 5 levels of activity that largely relate and can tie through the number of units produced and units not produced. So making sure that we understand what is the activity, what is the cost pool. So the cost pool is an activity cost pool is a cost bucket in which costs related to a particular activity measure are accumulated. And again, bear with me, the definitions will be one thing, and then we're going to do a comprehensive example to kind of apply these. From there, we have our activity, the cause and effect, the costs associated with that activity called the cost pool, and then we have the activity measure, which is an allocation base in activity-based costing. It's also known as the cost driver, and so this typically drives that cause and effect relationship. So these cost pools increase when the cost driver increases. Okay, a couple more visuals and then we'll get to the example. We have a manufacturing company, and they're gonna basically combine these into those 5 different activity levels. So we have our unit activity level, batch, customer, organization, and product level. And what we're saying is that each time you manufacture something, then a cost is going to go to one of these levels. Each one of these levels is going to have at least one cost driver. So we pair a cost driver to a cost pool, which is a bucket of costs, and then we allocate it to the product depending on how much of this each levels do they incur. Okay, so visually speaking, my apologies. This is something that I can't change from the textbook, but I do recognize that the formatting here isn't ideal. So we have a duration driver and a transaction driver. So on our transaction driver, we count the number of items and the activity that occurs. And then for the duration driver, we count the number of time needed. Okay, and these are common types of activity measures, although there could be basically an unlimited, it could be square footage. If the square footage drives the amount of costs incurred, it could be a lot of different things, and that'll be given to you. All right, so again, we have our cost objects, the product and customer. We have the activities, they consume resources, and then we apply them to get our total cost of the activity. And the steps that we'll be going through, and again, it's not important to memorize the steps, but rather it's important to understand and know and apply what we're doing here. But because we like lists, definitely as accountants, we do like to make a little checklist. So if you'd like to take a screenshot of this and use this to kind of walk through the example, great. If you want to just go with your intuition, great. And if you're like, I don't know, try it with your intuition. And then you can always go back and take a screenshot and take a look at this when you do your first example. So up to you. But we're going to be looking to identify and define activities, the cost pools and activity measures. A lot of times these are going to be given to you and you have to organize. In real life, this number one could take literally months, if not like 6 months to a year. My friend worked at Nexon. Her and a team of 3 people overtook a boardroom for 3 months, and this is basically what their full-time job was. So, a lot of work. All right. And for those of you who don't know what Nexon is, it is an oil and gas company in Calgary. All right. So number 2, assign overhead costs to activity cost pools. So we have a bunch of costs. Which pool do you go into? What's the thing that what's the driver that makes the cost incur? Put that into the activity cost pool. Then figure out what your activity rate is. Assign each of the overhead from the cost pools according to the measures to the cost objects, and then prepare your reports. So basically, you used to have a traditional costing report where you had products and what they cost, and now you'll have the same. It'll just be using the ABC costing versus the traditional, meaning that you've used multiple cost pools versus at capacity versus the traditional with the predetermined overhead rate. So same, but a little bit different. Let's look at this visually. And this is going to be our first and our comprehensive example for the remainder of the video. Okay, so we have at Classic Brass, the ABC team selected the following activity cost pools and activity measures. So we have customer orders that are going to be measured by customer orders. Product design, which are going to be measured by the number of product design. We're seeing the cause and effect. The more products we design, the higher the costs in the cost pool for the product design. Same, but different. The amount of customer orders is going to drive the amount of customer costs in that pool. Okay. Order size, machine hours, customer relations, number of active customers, and then we're going to have another bucket that does not have an activity measure. All right. So, friendly reminder, what we're doing here is a cost object is going to be anything like a product, customer order, customers. So the thing that we want to be costing to see if we're charging enough to cover the cost of that order. We still allocate all the direct costs, anything that can be tied directly to it, materials and labor. And then the rest of these things, both manufacturing and non-manufacturing, both product and period costs, get allocated to activity pools and then allocated to each of the cost products. And then we know how much they cost. Okay. So we are going to be looking again, like I said, at classic brass. And what we started with is your traditional, this is your traditional costing system, where we're looking at the product department, and then we have our depreciation and our marketing. So we have a bunch of overhead costs, $1.8 million worth. So just over $1.8 million worth. Great. What the heck does that mean? Well, let's take a look at that in a different way. Okay, so classic brass gave us this information that we saw from our traditional costing. And then the ABC team, the activity-based costing team, said, cool, we understand that we have all of these costs, and we have these, as we said in the prior slide. Let me just pull that up. We have customer orders, product design, order size, customer relations, and other. Cool. We're going to break down each one of these costs into each one of those activities, and we are going to tell you what percentage, for example, what percentage of customer orders does the indirect factory wage receive? How much of product design does the indirect factory wages receive? How much of customer order? How much customer relations? And then we do that for every single cost here in this column, because these are subtotals or totals just in this column. So then we're like, okay, factory equipment, customer orders uses 20% of it. Great. Factory utilities, customer orders use 0% of factory utilities. Okay. 0% of the factory building lease. Okay. But they use 15% of administrative wages and salaries. Cool. All right, so you kind of go through each one of these according to their activities. So we're effectively taking this and splitting it across all of these according to this total. So our textbook has done that for us. So what I'm going to do is bring that on screen, and then I'm going to prove off one of the columns to you and go from there. All right, so my apologies. In a perfect world, when my typing isn't limited, I would have typed this all out for you and I would do it one by one, but that is not the world we live in today. So what I'm gonna do for you, is do a proof for the customer orders. And then we know that it falls across. And honestly, as a good activity, it might be great for you to prove this for yourself. Because if you can do one with me and then the rest on your own, either here or in a future practice problem, that's just really great practice. You nail it, and then you get to the final exam, you get to your quiz 2, you get to the term test 2, and you see this and you're like, yes, I am ready for ABC. Like ABC makes you happy. All right, so let's do the proof of customer orders. And so what we have up here is we have indirect factory wages, and that was for 500,000. So I'm grabbing that number from right here. And we have equals 500,000 times by 25%. Great. And I have 125 and they have 125. Fabulous. So far, so good. I know no marks for pretty, but let's just help me out seeing some. Okay, seeing some commas. Alrighty, so then we have indirect, just line this up a little bit. And then we have factory equipment. So factory equipment was 300,000 and they get 20% of it. So equals 300,000 times by 20%. And that's 60,000, that's 60,000, great. Let's go down, this is 0 because it's 0. 0% allocated, so that makes sense. And then we have administrative wages and salaries, so they get 15% of it, so 15% of how much, let's see. 15% of 400,000, cool. 400,000, fabulous, so 60, great. All right, now we get 30% of office equipment depreciation, 30% of Office equipment depreciation is $50,000. Fabulous. Got to have an equals. Really? No commas. Doesn't like the comma. Fabulous. 15,000. Awesome. 0% is 0%. Good. Or 0% equals $0. Fabulous. All right. Marketing wages and salaries, 22%. Okay. Let's see what we're getting 22% of. 250. No comma. But in equals, dear goodness. My apologies. I told you guys to get coffee. Thought I had enough. Okay. 55,000, 55,000. Fabulous. Let's do one more for this proof. At this point, you're like, thank goodness you are unable to type for all of it because I'm even able to watch. Could you imagine? That'd be a long time. Okay. Selling expense, 50,000 times 10%. Cool. 5,000, 5,000. Fabulous. All right. Let's do some. And we equal. Awesome. Okay. So from there, I encourage you to do the rest of this. And you would see that this would, the product design, the order size, customer relations, and the other would then math out the same way that customer orders did, and it would reconcile. So see, we still have the same $1.81 million worth of costs, but now we've just put them into each activity pool for each of those individual overhead costs that couldn't be tied directly to a product. Awesome. All right. So we revisit. That's what we did to allocate all of these costs to their activity cost pools. And now we will be determining the classic brass is expected to have the following total activities. Now we have activities for each cost pool. We have 1,000 customer orders, 400 new designs, 20,000 machine hours, and 250 customer relation activities. Alrighty, so we're going to take the cost pool and divide them by their driver so that we get the activity rate. Let's go look at that. And we are back in Excel. Great. So we took the information from the slide where we said that we had the total activity, 1,000 orders, 400 designs, 20,000 machine hours, 250 customers, and not applicable for the driver. Not going to allocate anything here. So what we're doing here, we're going to do the same thing, continue along with a proof here, pardon me, for our customer orders. So we're going to take the $320,000 that was allocated in total for our customers, and we're going to figure out what the total activity rate is. So equals 320,000 divided by the 1,000 orders, and we see that we have an activity rate of $320 per order. And you would continue and do the same thing. So 252 for product design divided by the number of activities equals $630 per design. And again, these are all the capacity for the ABC costing. All right, so we have some great information as far as what each of our inputs are really going to be costing. Let's take a look at the big picture. So what we've done thus far is we've directly traced materials to their cost objects. Same thing with direct labor, same thing with shipping costs. And now what we've been able to do is take most of our costs minus that last one. What was their name? Other. Okay. Most of our costs, put them into cost pools and take the driver and get a cost per order. So now we have the second stage allocation, which we then can apply to the different cost objects. Everything except for our other bucket, and we'll talk about what to do with that later. Okay, so $320 per order, $630 per design, $19 per machine hour, and $1470 per customer. So same information that we have here. All right. So now we have some information. We are going to be assigning that overhead to products. We have some more information from Classic Brass. We have some standard stanchions and some custom compass. Oh my goodness. Compass housing. Okay, we got some stanchions and we got some housing. And so they're going to tell us what kind of come up with each one of them, and we're going to allocate the cost accordingly. So this one doesn't require any design resources, therefore it gets no design costs. Cool. But there's 300,000 units and they got 600 separate orders. You best believe we're going to assign some costs to that activity. You need some machine hours. All right, we're going to give you some machine hour costs. And then custom housing. Yeah, you need a new design. You get design costs. You get orders. You get designs. You get machine hours. You get costs. You get costs, and you get costs. So we're going to allocate them accordingly. All right, let's do that now. All right, so on your left here, you have the total allocation for the standard stanchions. We'll walk through the activity, but right now they're saying, cool, thanks standard stanchions, you get 524,500. And custom housing, you get 427,500 of the total overhead costs associated to you. And why is that? Well, let's do a little bit of a proof. So I took the information, and we see that they had these types of activities, so they get these types of costs. So customer orders, they had 320, which we see per order up here, times by, they got an activity rate of 400, so, pardon me, of 600. So you get 600 times 320. Cool, you get 192. Product design, you had $630 per product design, and you had 0 of the activity, so you get 0 of the costs. And you had, let's see, order size. So per order, you get $19 per machine hour, $19 per machine hour. You had 17,500 machine hours. So you get 332,500 worth of costs. Let's sum that up. You get 524,000. So that equals fabulous. Our proof is there. And then they do the same thing for the custom housing. So if you follow along this, I suggest that you prove this according to the computation activity rates and the input drivers here. All right, I'm gonna take a quick intermission and confirm with what many of you are likely thinking right about now. This isn't so bad. And I would agree. However, here is what is bad. First of all, in real life, this is really bad because you're told what all these are, but you had to actually go through and calculate them and find them and see what's appropriate and see what the cause and effect are. Because if you don't have the cost driver closely attached to the cost pool, then really, are you doing anything better than the predetermined overhead rate? Likely not from chapter 5, likely not. So it takes a lot of time, lots of effort. And then if you're like, well, that's fine, I'm never going to do this in real life, but in my test, this would be awesome. And yes, I agree. I would be happy if I was a student and this popped up on a test. I mean, relatively happy considering all things. But where students tend to get, tripped up is if they don't do enough practice of this, then when the exam stress hits, they aren't able to kind of execute. So yes, all we're doing is multiplying, adding, dividing. But in a test environment, especially one like in a quiz or any kind of in-person, then you don't kind of have, there's real test, I don't even want to say anxiety, but there's test factors, right? At home when you're taking a test, you don't have somebody else breathing around you, right? But you have other people, other noises, other stress, other, start now, stop now, do this, do that. So practicing to making sure that you really understand the order of operations, how it applies. You kind of have that intuitive feeling of ABC costing. That is where you're going to be confident, and that's where you're going to execute really well, and where this will be, I don't want to say easy marks, but well-earned marks and kind of more sure marks. Okay, let's go back to the slides because we've completed our standard stanchions and our custom housing, and now we have system works for one of the 250 customers, and that's Windward Yachts. So Windward Yachts just placed 3 orders. They have 2 orders for 150 stanchions, and they have 1 order for housing. and they've told us that there's going to be the following breakdown in machine hours. So let's go calculate some costs as the last part of this video and the last part of our ABC costing. Okay. So again, like what we did with standard stanchions and overhead like we did for standard stanchions and our custom housing, let's do it for our windward yachts. In this column here, we've broken down the activity that they've told us, and then we're going to just take our activity rates as we previously did. Let's do the proof together for our ABC costing. For our windward yachts, we have our activity rate of 320, and we're going to have 3 customer orders. We have 1 product design for 630. We have an order size of 19, and remember we have 177 per order. And then customer relations, scroll all the way up here, and we see that customer relations is going to be $14.70 per customer. You got one of them. It's windward yachts, so put $14.70 here and add these all up. And for our individual customer of windward yachts, we have a total of $6,423. People, I know that labeling this one a mini lecture is perhaps more or less accurate. However, I really do believe that going through one comprehensive example and going through the different proof while leaving you time and attention to kind of expand out was both the effective and most efficient use of time. As always, if you're wondering about how these other items that we didn't do the single proofs line up, or you're having a hard time replicating the numbers, please do book office hours. Come see us during office hours, and we will be happy to discuss that. Post to the discussion board, and we will go from there. All right, thank you so much for your time and attention, and I will see you in our next and last video.